So, you know how everyone thought they had a handle on Australia's interest rates? Well, think again. It feels like the entire rulebook just got torn up. For weeks, the story was simple, right? Hold steady, wait for the numbers. But then, bam, one speech and the whole script got flipped on its head.
So, the big question on everyone's mind is, what just happened? Seriously, how did we go from a pretty predictable path to suddenly talking about a potential rate hike in just a few days? Well, that's exactly what we're going to break down right now.
And this is the headline that sent shockwaves through the market. A rate rise, as soon as this month, is suddenly on the table. This isn't some remote possibility anymore. It's a very real prospect, and believe me, traders are scrambling to figure out what it all means.
Okay, so to really get what's going on, we have to rewind a little bit and look at one key moment. It all comes down to a speech that was a huge reality check for anyone thinking the next few months would be quiet on the central bank front.
And here she is, the central figure in all this, the Reserve Bank of Australia Governor, Michelle Bullock. She was speaking at a business summit, and she delivered a message that, well, it fundamentally changed everything the market was expecting. Now, the specific words here are so important. The board will be actively looking at whether it needs to move more quickly. You have to understand, in the super careful, measured world of central banking, that phrase is like a flashing neon sign. It's a massive signal, a clear warning that the patient wait-and-see approach might be totally over. This really puts the change into perspective, doesn't it? The old script, the one everyone was working with, was that the RBA would probably wait, hold off until that big quarterly inflation report came out. But the new reality? Every single meeting is now live. The biggest takeaway here is that predictability is pretty much out the window. So, okay, a big statement like that gets made. How did the markets react? Let's take a look. Because trust me, when a central bank governor changes the script, money moves, and it moves fast. The stage was really set for this drama by one number, 3.8%. That was the latest monthly inflation reading, and it was what you'd call a hot number, higher than anyone expected and way above the RBA's target. So this already had investors on edge, and it meant they were listening very, very closely to what the governor said next. And boom, here's the immediate result. This chart shows what traders were betting on for future rate hikes. Just last week, they had priced in about 36 basis points of increases. But after the governor's speech, that shot up to 47. And a basis point is just a tiny fraction of a percentage point, so that leap is huge. It means the market is now basically betting on almost 2 full-on rate hikes this year. And here's another way to look at the impact. Check this out. Australia's 3-year bond yield, which is a great way to see where the market thinks interest rates are going, jumped 13 basis points almost instantly. That's pretty much the market screaming, okay, we heard you loud and clear, we think a hike is coming sooner, not later. But was this warning actually the right move? Well, as you can probably guess, the experts are all over the place on this one. It sparked this really interesting debate. Was this a smart, prudent warning, or is this a potential policy mistake in the making? So, on one side, you've got people like Andrew Lilly from Barrenjoey. His take is that this was totally deliberate, a calculated move. He called it a significant surprise that was designed to shake investors up a bit, to get them out of their comfort zone and remind them that the RBA isn't going to stick to some predictable schedule. It's all about regaining control of the story. But then, on the other side of the argument, you've got folks like Rennie Ellis at Arculus Funds Management. He thinks a rate hike right now would be a flat-out mistake. And his reasoning? He believes weaker economic data is just around the corner, and that the RBA is taking a huge risk by tightening things up right when the economy might be about to slow down. And just to make it even more interesting, there's a third view. Charlie Jameson from Jameson Coote Bonds is a bit more skeptical of the whole thing. He points out that inflation is actually cooling down in most other Western countries, which kind of makes Australia an outlier. He's betting that all this talk about hikes is just noise, and that the next actual move from the RBA, it's probably going to be a rate cut, not a hike. Okay, so the script has been torn up, the experts can't agree. What happens next? Well, there are a few key things that everyone, and I mean everyone, is going to be watching to see which way the Reserve Bank leans.
All right, here's what you need to keep on your radar. First, what's happening with inflation around the world? Is Australia going to stay the odd one out? Second, the data here at home. Are we going to see those signs of a slowing economy that some experts are predicting? And finally, the big one, the federal budget in May.
You better believe that any major tax changes or new spending could completely change the economic picture and what the RBA decides to do.
And all of this leaves us with the ultimate question, right? The RBA has put a rate hike firmly back on the table, and it's forced everyone to completely reset their expectations. But is this a necessary response to that stubborn inflation, or is it a costly misstep that could push the economy in the wrong direction? Honestly, only the numbers over the next few months will give us the answer.